Hello. Are you are you there? Are you able to hear from this side? Sorry, I was reminded that I wasn't recording. So for recording purposes, for our client, some of our clients who are not yet here, I'll recap a few things that I've just said. We are looking at CPA paper 13, that is public financial management, and my name is Charles Mukasa. I'll be taking you through this paper together with my colleague Robert Karema, who will come in later. Probably those of you who attended yesterday's session, you might have seen him. So we shall be taking you through this paper, the two of us. So I also said, before I started recording, I said public financial management, just as the name sounds, we are looking at the financial management, the public sector. And I also mentioned that financial management in this paper does not have any connection with the financial management that you have met in other papers in the CPA course. Not the level 2 and not even at level 3. This is a unique financial management. And I said, for that matter, under this financial management of the public, we are looking at the laws, stock regulations. We are going to look at the systems. We are going to look at the processes and institutions that work together in order to manage public resources. To manage public resources, specifically the financial resources. So for that matter, I'm too low. Is it common to everybody? Are other people hearing me well? Could it be Matthew's problem only? I don't know. Let me know if there is any issue. Maybe they can be sorted. Is there any other person who is not hearing me very well? Oh, it's low. Alinda also said it's real low. Okay, let me see what we can do. Maybe for the meantime, let me pause and I record. Okay, we are looking at public financial management and what it means. These are laws and regulations, systems, processes, and institutions that work together in order to manage public resources. So the public financial management we are looking at here is how public officials are supposed to manage the public resources efficiently in order to deliver or to achieve the government objectives. So that's what we look at. So the paper covers the entire public financial management cycle, which starts with the cycle, the public financial management cycle. It starts with planning. We can call it financial planning. Then we have revenue mobilization. Then there we shall have resource allocation. call it budgeting. Then after that, after allocating the resources or budgeting, then we are going to have the execution, the budget execution, call it expenditure. Then after that, we shall now have the accounting, and reporting. You can call it financial reporting. What follows there is audit, and then lastly oversight, checking whether public officials and public entities have done their work as expected. So that is the cycle. So when all this is done properly, then we have proper public financial management. So we are not looking at project appraisals as you do in the other financial management. So basically, that is what we are going to cover, and that is actually covered in a very detailed. Hey, was I really sharing? Okay, yeah, I think I'm sharing. It is covered in a very detailed syllabus, as you can see it here. So in this syllabus, we have 17 topics. So all these 17 topics actually feed into this financial management cycle. So every topic or chapter we are going to look at will be feeding into one of those very important stages in the public financial management. So there are 17 chapters, but from experience we cover beyond the 17, as I will explain later. I think we cover up to around 22 topics, just to make sure that we are prepared for the examiner misbehavior. In this paper, the examiner sometimes misbehaves and goes beyond this very detailed syllabus and sets beyond this. So we shall not limit ourselves to this, but we shall look beyond this, as I will explain later. Now, these topics that you see here, we start with the introduction to public sector. So there, the aim is to understand, introduce you to what public sector is, what public sector entities are. How do we tell that this is a public sector entity? How do we differentiate public sector entities from private entities? And then how do we differentiate the accounting and the reporting in the public sector from the accounting in the private sector? Then how do we, what are the categories of the public sector entities? What are those categories and what do they do? For example, briefly, the public sector is divided into two major categories. That is the central government and the local governments. So central government has ministries, you know some of the examples, then the departments, and then the agencies. These are semi-autonomous entities that are set specific to handle specific mandates. They are semi-autonomous in the sense that they keep reporting to at least a ministry or a department. So there has to be a ministry or a department that supervises such an entity to be called an agency. They take on the forms of authorities. For example, you can talk about Wildlife Authority, You can talk about National Forest Authority, URA. Then others are called commissions, like the Electoral Commission. Electoral Commission doesn't fall here. It's an independent commission, so to fall under somewhere here, statutory bodies. There are some commissions like Equal Opportunity Commissions fall under there. Some are called boards, like the one I was going to say was also merged. Now which board is there? Okay, they take on different forms as we shall be looking at them. Then the local government, here we look at purely either rural or urban local governments. Rural local governments, we are looking at districts, sub-counties, parishes, villages. Then in the urban, we know we have city authorities like KCCA, then city councils, then municipal councils, divisions, townships. Then there are others. These are the major ones, but also there are others, other types of entities like statutory bodies. These ones which are established by Act of Parliament and they are independent. They are not supposed to report to any other entity. For example, the Auditor General, Office of the Auditor General, the Electoral Commission, then there are some related government entities. For example, the public corporations, these are government business enterprises, the ones that do business for government. In other words, they charge for what, they charge a price or a fee for what they do. It's not, their services are not free. So in these past categories, the services are free. But when we come to related government entities, some of these, their services and goods are not free. For example, National Water, New Vision, UEDCL, the one that inherited Umeme, public universities, their services are not free. So they fall under that. Then, so we shall look at that. That's the introduction. Just try to understand what public what public sector entities are. Then after that, of course, we look at the regulatory and institutional framework. Now here we are looking at the laws and regulations that establish or that help to guide in this process that we saw. So, for example, when we are doing the planning, what laws, what policies, what regulations do we follow? And how do we follow them? Revenue mobilization, how does government raise its revenue? And what laws, what must they ensure? What does the Constitution say about that? Which law talks about that? So there we are going to look at quite a number of laws, like the Public Finance Management Act. Okay, we'll start with the Constitution, the Public Finance Management Act, the Public Finance Management Regulation, the Treasury Instructions, and quite many others. So that's what we are looking at here, regulatory and institutional framework. So regulatory talks about the laws, the regulations, the policies, the guidelines, the manuals. Then institutional framework, here we are looking at the institutions, the offices that have a role to play in the public financial management cycle. Those offices that are established by law or by constitution and have a role to play in the cycle. For example, we shall look at the Minister responsible for finance. What role does the Minister of Finance, and in particular the Minister of Finance, what role does he or she play in the public financial management? Remember, we looked at that process, the cycle. For example, at planning level, at revenue mobilization, resource allocation, what role does that play? So that is the institutional framework. So the others include Parliament as an institution, the Auditor General as an institution, the Office of the Accountant General. It's called the Accountant General's Office. Auditor General is the one they say OAG, Office of the Auditor General. Then Accountant General is that, the Accountant General Office. The other is Office of the Auditor General. Because they have similar letters, that's why they were abbreviated differently, so that we don't confuse them. So such institutions like the Internal Auditor General, IAG, and many others. But as we are looking at this regulatory and institutional framework, remember we said public sector is divided majorly into two: central government and local government. Even these other ones, the statutory bodies, somehow these other ones come back to central. They are regarded as central government entities. So majorly public sector is divided into two. So when we are looking at the regulatory and institutional framework, we are going to divide it into two. We shall look at the regulatory framework for the central government, and then the regulatory framework for the local government. Then, when also we come to the institutional framework, we shall also divide it into central government and the local government. So these are some of the offices we are going to look at. Secretary to the Treasury, also called the PSST. Permanent Secretary and Secretary to the Treasury. Accounting officers, Internal Auditor General, and then National Planning Authority, purely planning. Then, the local government. Some of the institutions that I look at include local government councils, the Local Government Public Accounts Committee, part of the council, appointed from the council. Local Government Finance Commission. This is a semi-autonomous, semi-independent entity whose work is to advise the president on the revenue allocations to the public, to the local government entities. So shall look at their role. What role does this Local Government Finance Commission play? The District Local Council. This one is one. Most of these, actually all these, apart from the Local Government Finance Commission, the rest you find them at every local government. But the Local Government Finance Commission is one entity in the whole country. Then the Chief Administrative Officer or the Town Clerk, the Chief Finance Officer or the Town Treasurer, then the Chief Internal Auditor. So at this level, we are only looking at the regulatory and institutional framework. For example, this part that I had skipped, here we are going to look at the laws and the institutions that have a connection to these. Remember, these are part of the public financial management cycle we looked at. For example, budget preparation. What laws here? What institutions? Which laws do we follow? Which institutions do the budget preparation? The execution of the budget. Which laws? Which institutions? Monitoring and financial reporting. What laws do we follow when we are doing financial reporting? And which institutions have a responsibility and a role to play in financial reporting? The same to external audit. Which institutions, which laws? Parliament and the Treasury Memoranda. So we'll look at those. Treasury Memoranda may be something new here, but we will get to know them later. I don't want to over-dwell on so many, but maybe let me talk about Treasury Memoranda. This is after the audit. when the Auditor General, Office of the Auditor General audits the accounts of public entities, it reports to Parliament. Parliament makes recommendations, and these recommendations are communicated to the entities that were audited. So now these entities are supposed to implement the parliamentary recommendations. Of course, the Parliament says implement ABCD, do this, institute this in your entity. Then these entities are supposed to implement, but also document their implementation process and report back to Parliament. You told us to do ABCD, so far we have done ABC. So that document that brings out what has so far been done on the previous parliamentary recommendations resulting from the Auditor General's report is called the Treasury Memoranda. It's a document that details the implementation status of the parliamentary recommendations regarding the Auditor General's report. We shall look at it, what laws guide there, which institutions are responsible to play a part in there. Then the rest here, these are the laws, some of the laws that we shall look at. Constitution, the Leadership Code Act, the Accountant Act, the Local Government Act, the Public Financial Management Act, which is the principal law. Apart in next the Constitution, this is the next in command when it comes to public financial management. That act there and its regulation. The National Audit Act, the one that the Office of the Auditor General implements, shall also look at it. Basically, we are looking at in that law or in that act, where does it talk about public financial management? For example, the National Audit Act will only concentrate on audit. So shall now pull out where it talks about the audit. So some of those things. Then Public Procurement, and this was the Public Assets Act and its regulations. So this one is purely procurement, where government entities want to acquire either goods or services or assets, or to dispose some of its assets. So what laws? At this level, we are looking at what laws, which laws, and how do these laws guide in that process. Then later, we shall now go into the details of some of these as we are going to see. So the first three chapters, the introduction, the regulatory and institution framework, and then the next one, the reporting framework. Those first three are all introduction chapters. We are simply trying to look at, in brief, to look at some of those very peculiar issues that we shall expand later in some of the chapters to come. So the next one there is the reporting framework. Remember, we said we are looking at the public financial management cycle. So now we are going to pull out reporting framework. We now concentrate on this part, accounting and reporting. So the framework, the principles that are followed while doing the accounting and the reporting. What are those principles? So all the principles that are followed make up the framework. So of course these also come from the laws which we might have already looked at here in the second chapter. So here we pull out from these laws at this level, chapter 2, we are looking at these laws in general. They guide throughout the whole public financial management cycle: planning, revenue mobilization, budgeting, budget execution, audit, oversight. So at this level, we look at the whole process. Now, when we come to the next chapter, C, we now reduce our scope. We are now going to look at some of those very laws we have already looked at, but concentrating on the reporting. How do they guide in the reporting? Is it okay, members? Are you following? Anybody lost? Feel free to unmute at any point and you talk to me where you have a question. Let me welcome any question you have at this level. You can unmute, you can put in the chat, because I might be talking alone when the guy is up already left. Can we proceed?
Yes, sir. We may proceed.
Okay. So the reporting framework, here we are looking at the scope of the authority, scope and authority of the framework. What makes up this framework? What does it cover? Scope. Where does it start from? Where does it end? The authority. Where does it get its authority from? Which laws? Which regulations? Which policies? Which standards guide or give this framework the authority? For example, in the scope, in the framework, we say, I'm just picking one of them, all accounting officers are supposed to prepare financial statements for the quarter, for each quarter, for 6 months, and for the year, and must present this to the accountant general. Where is that mentioned? That's now the authority. Where is it mentioned? What penalties are there if they don't do that? That's now the authority. Then the problems addressed by the framework, the accounting requirements for central and local government, specifically the accounting cycle. That's when, what do we prepare? Which reporting do we do at what level? Monthly, which statements? By what time should they have been submitted? To whom are they submitted? And which kind of reports are supposed to be prepared and submitted? Then the accounting policies which are followed, and the financial statements themselves. Then also look at the role of the Institute of Certified Public Accountants and also the Accountant General in the standard setting process. Then we look at the International Public Sector Accounting Standards, concentrating at the conceptual framework, because the framework makes up the reporting framework. So now the conceptual framework, some of you who did paper 12, that is advanced financial reporting, you might have looked at the conceptual framework in the private sector or in the ISs and the IFRS. We also have one this side. So here we don't have IFRSs, we don't have international accounting standards or even the international financial reporting standards. Here the standards we look at are called International Public Sector Accounting Standards. So they are derived from the international accounting standards, but customized to the public sector. So that's why in between we add the word public sector. Otherwise, when you remove it, it means international accounting standards. But they are customized to the public sector because of the unique nature of public sector transactions. Most of the private, the ISs and the IFRS could not give sufficient guidance in accounting for these public sector transactions. So that's why they had to develop the International Public Sector Accounting Standards, as we shall see later. Then the structure of the standard setting process. How are these standards set? Then from there now we look at the International Public Sector Accounting Standards themselves, the ISS. Now still here we are still looking at reporting. So those accounting standards are going to be applicable at the accounting and financial reporting level, not at planning, not revenue mobilization, not resource allocation, not budget execution, but how do we account for the transactions using the standards, and how do we prepare financial statements using the standards. So these standards are quite many. They are actually many, but this the syllabus we are looking at has only 9 standards. That is IPSAS 1, the preparation and presentation of financial statements. Then IPSAS 2, that is cash flow statement. So this one is live from IS 1 and almost is the same as IS 1. Differences actually come in when we look at the components of the financial statements. The statement of financial position, it's the same with the one of the IS 1, but with the slight changes. There are actually 2 major differences between these 2 financial positions. Whereas the one of the ISs, the statement of financial position is derived from the accounting equation. Assets equal to liability plus equity. So that's how we balance the statement of financial position. So the IS position and the IFRSs use this. Now, the IPSAS rearranges this a little, and we say assets minus liabilities equal to equity. So our financial position will have 2 sides, this side and this side, and they must be the same. That's one of the major differences. The second difference is that here we start with current assets. So when you are preparing assets, you start with current and then non-current assets. Whereas in the ISs, you start with the non-current assets and then the current assets later. So almost the same. Major differences between ISs and IPSASs is on this statement. The other side we call it the statement of profit or loss and other comprehensive incomes. Here it is simply a statement of financial performance. So that means also the structure, what we find inside that statement, are actually very different. Whereas the other one of the ISs aims at getting a profit or a loss, here the overall result in the statement is either a surplus or a deficit. The other side you have incomes. Here we have revenues, different names. And then the other statements. Cash flow is the same. Changes in equity, same. So we shall look at those in details when we start the IPSASs. Then IPSAS 2 is statement of cash flows, derived from IS 7. And I think there are no major differences between IS 7 and IPSAS 2. They are almost the same. Then, there we skip. The syllabus skips 2 standards in the middle. That is IPSAS 3 and IPSAS 4. But for us, we say much as they are skipping them, we shall cover them. IPSAS 3, that is accounting policies, accounting estimates, and errors. I've said it in brief. The whole thing is accounting policies, changes in accounting estimates, and prior period errors. This is derived from IS. Which IS is this? Let me see people who remember, who still have their earlier knowledge. Which IS covers accounting policies? I have an answer here. IS 8, thank you. IS 8. So, much as it's not on the syllabus, we shall, if time allows, of course, we shall cover it. We shall first cover the ones on the syllabus, then if time allows, we cover the ones which are not on the syllabus. And why do we cover them? Because the examiner has examined them, even when they are not on the syllabus. So since we are here to pass, we don't give room for any regret. Okay, then IPSAS 4, the effect of foreign currency transactions. We shall also cover it as derived from IS 21. Then from there, we go back to the syllabus. We cover International Public Sector Accounting Standards 5, that is borrowing costs, as derived from IS. Which IS is this? That is, okay, they have an answer here. Thank you, Josephine. That is IS 23. Yes, we shall also cover it. Not very different from IS 23. Yeah, this is IS, yeah. It's not very different. I think the major difference is here. Number 3. That's where we have the major difference from IPSAS 5 and IS 23. What they call the benchmark treatment, and then what they call the allowed, actually not 3 only, 3 and 4. 3 and 4. So IS 23 takes, there are two ways, there are two alternatives of accounting for borrowing costs, which is the major focus of the standard. Do we expense the borrowing costs, or we capitalize the borrowing costs that qualify for capitalization? So IS 23 takes the capitalization as its benchmark treatment. Benchmark means the most expected treatment. The most expected treatment. That's a benchmark treatment. Where, for example, if a question is silent about which treatment, the one you're supposed to use, that's the benchmark treatment. Then allowed, the alternative treatment is one that is not very much preferred. So IS 23 says takes capitalization of borrowing costs to be its benchmark treatment, and takes expensing to be the alternative. Now IPSAS 5 does the reverse. So here benchmark treatment is expenses, then alternative is capitalization. The rest are the same. Then from there we skip, from 5 we go to 9. So 6, 7 and 8 were removed and were changed. Those are consolidation standards, preparation of consolidated financial statements. So they were modified and they become IPSAS 34 to 36. And they are not on the syllabus, and we shall also not cover them, since the examiner doesn't show any signs of examining consolidated financial statements. So we shall not cover them. So we go to 9, that is International Public Sector Accounting Standard 9, revenue from exchange transactions. Now, in this paper, revenue is covered by two standards. That is IPSAS 9 and IPSAS 23. This is exchange. This is non-exchange transactions. Revenue from exchange and revenue from non-exchange transaction. Just as you hear the word exchange. So public sector has majority of the transactions in the public sector are non-exchange, in a sense that either the public sector entity receives something of value and does not pay back for it, or the entity pays but does not expect a direct exchange from the other party that it has given to. For example, you see that when we pay taxes, which is a major source of government revenue, we are not expected to go and demand for a service equivalent to the tax you have paid. You don't walk to your office and say, please, I've just paid a tax of 1 million. Can I receive a service of 1 million? You can't do that. So, meaning tax is a non-exchange transaction where government receives it but does not transfer directly equal value to the other party. Donation, where government entity gets a donation from, let's say, World Bank or from government of United Kingdom. They just get a donation, they don't pay anything back. But also on the expenditure side, most of the services of government are free. They provide the service and the people who are receiving the services do not pay for these services, leave alone the corridor money. But we're talking about the actual service. The official payment is not expected to be done. The Kitu Chidogo is a different case. So, those are the non-exchange transactions. So, such transactions are covered under IPSAS 23. Now, IPSAS 9 covers exchange. Bank way in Uganda. You give value, you must get approximately equal value for the person you have given your value. So IPSAS 9 covers that and categorizes revenue in 3 categories. That is revenue from rendering of services, revenue from sale of goods, and revenue from interest, royalties, and dividends or similar distribution. Then from there we shall now jump to IPSAS 17. But before that, in between there are standards that the examiner didn't put on the syllabus, but some of them are so much examined. For example, we shall not leave IPSAS 12 uncovered. This is inventory, derived from IS 2. That is a darling to the examiner. I don't know why, for what purpose. It's not on the syllabus, but the examiner keeps setting it. So we shall not skip it. If time allows, also we shall cover IPSAS 16, investment property, derived from IS 41. 41, IS 40. So from there, we shall now go back to IPSAS 17. PPE, very, very, very important. There is no examination paper in this paper that you will ever sit and you don't have to deal with PPE. At least I've not seen it. So shall cover PPE, property, plant and equipment. Then from there, the syllabus jumps to IPSAS 24. No, I think the arrangement, the examiner the developer of the syllabus didn't arrange them very well. From IPSAS 17, we shall go to IPSAS 22. That is disclosure of financial information about the general government sector. It's one of the shortest standards. It's a sort of consolidation statement but it uses different rules for consolidation called the statistical basis of financial reporting. So we shall understand it when we start on it. Then next will be IPSAS 23, which I've already talked about. IPSAS 23 covers revenue from non-exchange transactions, specifically from these types of transactions. That is from here. No. These are not the ones, but taxes is one of them. Fines and penalties is also another one. I think the rest were not mentioned here, but there are about 8 categories of revenues that we cover here. For example, we shall have bequests. Bequests is like, these arise from wills. When a person is making a will, a death will, not common in Uganda, but in other countries, people decide to leave their property in the hands of government. So in their will, they mention that my property, such and such a property, will go to such and such a government. So to government, they are going to receive that as revenue and an asset, so it should be accounted for. Others include debt forgiveness, when a person owed a debt, decides to forgive an entity. Others also include, I've talked about the fines and penalties, donations, including also goods in kind, and also services in kind, and many others. So we shall look at how do we account for that under the International Public Sector Accounting Standards. Then from 23, we now go back to 24. The arrangement wasn't good in the syllabus. So 24 is presentation of budget information in financial statements. Call it budget comparison. What was the budget for that year? How did you perform against the budget? So this standard guides in presentation of such information. And then on the syllabus, lastly, we have IPSAS 32. Service concession arrangements in the books of the grantor. Service concession. Concession is like an agreement, an arrangement between usually public sector and the private sector entity, where public sector desires to provide a service to the public, but they want to use another entity to do that on their behalf. Usually that other entity is a private entity. So in that case, that private entity is called an operator, and the public sector entity is the grantor. So an agreement between these two to provide a public service using a service concession asset. One of the examples was the Umeme concession, which ended, I think, this last year. So it was an arrangement between government of Uganda and then Umeme to provide a service, which was electricity, using the service concession asset, which was the electricity distribution channels or system. So shall cover that. IPSAS 32 helps us in accounting for such arrangements. Now, the ones which are not on the syllabus but we shall also cover, in between there, we shall not skip IPSAS 21. That is impairment of non-cash generating assets. For that matter, we shall also briefly mention about IPSAS 26, impairment of cash generating assets. So these two move hand in hand, but our concentration will be so much on IPSAS 21 because that's where the examiner has always examined. IPSAS 26 is not any different from IS 36. So we shall not dwell so much on it. Then from there, we shall also not skip IPSAS 27, agriculture, since the examiner also keeps setting it as derived from IS 41. So we shall also not skip that, and also we shall not skip IPSAS if time allows. IPSAS 30, no, not 38. IPSAS 31. That is intangible assets as derived from IS 38. Same name. So those are the standards that which are not on the syllabus, but we shall also cover. IPSAS 3, IPSAS 4, 12, 16, 21, 27, and 31. If time allows. But a must, this agriculture must be covered, impairment must be covered, inventory must be covered, whether time allows or not. At least those three must be covered. Okay, so go back to our syllabus. Then, after that, after we have finished the IPSASs, and we are also able to prepare financial statements using these IPSASs, we shall now go back to accounting practice and basis. What I didn't tell you that in this paper, it's a balance of theory, which we normally call theory, the non-calculation part, and also the calculation part. So it's not purely calculations, it's also not purely non-calculation. So you must be able to create a balance, because as we shall see later, both contribute to your passing. So from those IPSASs, we shall be looking at calculations. Now the next chapter will be accounting practices and basis. So we now here move away from the IPSASs and look at the practical operations that are currently done in the public sector entities in Uganda. So how are they being conducted? Fund accounting, we look at the various funds where government keeps its money before it spends. I think there are basically three major funds that we shall look at. You must probably have heard about some of these. The consolidated fund, are they down here? Yeah, they are actually here. Consolidated fund, contingencies fund, petroleum fund, the local government funds, and any other funds like NSSF and many others. So in here, accounting practices, we are looking at the accounting cycle again, but this time looking at the practical bit of it. How is it being done? Remember, at first in chapter number 2 here, we concentrated on the chapter number 3. We looked at the reporting framework for these. Basically, the laws and regulations governing the reporting. Now here in this chapter, we now go practical. We now prepare some of these accounts. So we look at how are they being done in government. So we shall look at some of, for example, the accounting bases that are applied. That is cash-based accounting, accruals-based accounting. Then accounting manuals. We look at some of the documents or the manuals that guide, and how do they guide. The local government finance and accounting manual guiding local governments. The financial reporting guidelines. By the time they did the syllabus, there were financial reporting guidelines 2018, but now we have 2024. The treasury instruction 2017. So we shall pull out a few of those things: the accounting, how transactions are being accounted for, how financial statements are being prepared. In there. Then fund management, I've already talked about them. Then we'll look at the sources of government financing, how government raises its funds. Then the budget cycle, how preparation of the budget. So we shall now look at how the budget is prepared, the process of preparing a budget. And then the external audit, how the Office of the Auditor General conducts its audit. The audit processes and the reporting. How does the Auditor General report? Where do they report? When do they report? What do they report? Then the parliamentary oversight and treasury memoranda. Now we'll also look at the regulations around the treasury memoranda. Now here we shall look at the practical bit of it. Then after that, we'll look at performance evaluation in government. Remember, we looked at the cycle here, the public financial management cycle, and you say this cycle ends with oversight. Oversight means we are looking at whether and how the public entities execute their mandates. How do they achieve the object? Are they achieving the objectives? To what extent do they achieve their objectives? Have they done things the right way? That's what we call oversight. So quite a number of entities do this oversight, starting with the Office of the Auditor General. Then we look at Office of the Auditor General. We look at the Parliament, also does the oversight through its parliamentary accountability committees. Offices like IGIG, National Planning Authority, how do they do the oversight? The oversight role. So there we are looking at performance evaluation. So those entities that evaluate the performance of the public sector entities. Inspectorate of Government, internal audit also, that's the Internal Auditor General, Office of the Prime Minister, Office of the Auditor General, which we looked at already. Then the Parliamentary Accountability Committees. Then from there now, the other chapter is public procurement and this is of public assets. In the accounting cycle, the financial management cycle, it follows under this budget execution and part of revenue mobilization. When you sell your assets, you're mobilizing revenue. When you're procuring, then you're expending or spending money. So look at that's also one of the widest chapters here. So procurement process, right from procurement planning, when you're planning that next year we shall need to construct a road. Maybe we're in the Ministry of Works. So next year we shall construct a road from such and such an area to such and such an area. That's now at planning level. Until when the road is constructed. So that's the procurement cycle. So there are quite a number of stages that we go through until when this road is constructed. So from planning to budgeting to sourcing the contractor that will do the work, and then signing the contract, managing that contract so that the contractor delivers the work until a completion certificate is received from this contractor. So quite a number of activities that we go through, and this chapter helps us to tell us what laws do we follow, how do we follow them. So it's one of the widest chapters which we shall cover, as you see, even on the syllabus. It shows you that it covers almost 2 pages. Then after that, We look at the public financial management and accounting systems. The systems that help in the public financial management cycle. The integrated financial management system, which is the chief system, the main system that government uses for account for quite a number of activities, actually, for budgeting, a bit of budgeting, a bit of accounting, that is transaction processing, a bit of payments, then reporting. All those are done in that system. Then there are other systems, the integrated the integrated personnel and payroll system. I think this was now upgraded to human capital management system. That's what government is now doing. So instead of looking at the payroll system, we shall have to look at human capital management system. Then the treasury single account. Government no longer pays money through issuing checks like it used to do. Now they pay through the treasury single account. One bank account for all government entities held at Bank of Uganda. So government does direct payment to a service provider. So we have the money at BOU. We have Ministry of Finance, Planning and Economic Development. We have the entity here. And then we have the supplier here. So the entity is the one that has the budget. So it has a budget and money kept here. And then the supplier supplies the goods. So this is supplies. When they supply the goods, the entity now processes the transaction or sends the transaction to Ministry of Ministry of Planning, instructing them to pay this supplier. But then Ministry of Finance, Planning and Economic Development doesn't have the money. The money is at Bank of Uganda. This is where the treasury single account is. So the Ministry of Finance will instruct Bank of Uganda to pay the supplier. So the Bank of Uganda will pay the supplier from this entity's money. That's how it works. So one bank account, but each entity has a sub-account. So the treasury single account has treasury single sub-account. So each entity has a sub-account in this one account. We shall look at how that works, the process of how government pays. How does money leave this account to this account before it is paid to the supplier, and then the money goes back to here, and then also to the consolidated fund. Then lastly is ethics and public service values. Still part of the oversight and accountability part. Government officials are required to behave ethically. They have values to follow when they are doing their work. So those are the ones coming from the Code of Conduct and Ethics, or the Ethical Code of Conduct for public servants, and also the Leadership Code Act. Two sources that we look at here to help us look at how government officials, or that for that matter, public officials are supposed to conduct themselves. So look at, for example, issues like attendance to duty. How do they attend to duty? If somebody is in office, how are they supposed to attend to their clients? Do they take handling over and taking over of office, employment outside official schedule? How, for example, if you want to have a side hustle, how do you do it so that you don't encroach on the time that you're supposed to give your employer, government, and so many others? So, the sources of the information as per the syllabus are from those, and so many others. But of course here, as the practice for MAT Abacus, we give a textbook. So we shall give you a textbook, but also we give you notes. Unless somebody has a question. So that is what we are expected to cover. So when you look at our timetable, this paper that is so detailed, as you have seen, we have 36 lectures of 3 hours. That translates to 108 hours that we are going to use to cover this. And I think 4 revision lectures. So that totals to 40 lectures. That's 120 hours that we shall cover. Myself and my colleague Robert Karema. Of course, the examination format, I don't want to go there now, but you know that at level 3, the exam usually has 2 sections, A and B. Section A is compulsory, and section B, they give you 3 questions, and you do 2 out of those 3. We shall talk about that so much later. How do you prepare for this paper? But for now, what I can tell you, this paper requires you to read. It's so detailed, it's so wide, as you have seen. A lot of notes for you. So the earlier you start reading for it, the better, to increase your chances of passing. But also, make sure that you understand all these standards, the IPSAS we have talked about, and you should be able to prepare financial statements. I actually encourage you to start from the word go to get yourself used to preparing financial statements in this for government, because you cannot escape that. Question 1, up between 25 to 35 marks are allocated to preparation of financial statements. So if you get out of 35, if you can get like 30, then you just know you passed the paper, because you can't get 20 marks from the rest of the part of the syllabus. So Bismarck is asking, does this paper require prior knowledge? Yes, it requires some prior knowledge, but basically the prior knowledge you need here is accounting, not anything else. Accounting knowledge, that is financial accounting knowledge, financial reporting knowledge, and a bit of advanced financial reporting knowledge. If you have that knowledge, you're very, very okay. Hope I've answered you that question, because there are things we are not going to go back to debit and credit. We shall not teach you credit, the double entry basics, no, but yet they are very, very important in this paper. So that's the prior knowledge that you need. In line, just as when you look at this syllabus, actually the examiner did it very well. Oh, the design of the syllabus, at the start of it, they showed you which knowledge you need. There. So have financial accounting, financial reporting, paper 7, advanced financial reporting, that's paper 12. So the knowledge you get from here and there and here leads to that other paper there. Any other question, members? I want us to end here. Okay, maybe what I had not told you is that we usually have mock. Maybe the date of the mock will be announced. I encourage you to always do that mock exam because it helps you to check yourself. Sometimes failure in this paper or in this CPA course is not that you don't know the things, but sometimes how you present them matters. So even before the mock, I encourage you, try out those questions and you can meet any of us and you can give me your work and I look through just as you prepare yourself. Presentation of your answers also matters. Then at the end of every lecture, on my side, I don't know that my colleague also do that, but we usually do. There are questions that we leave behind for you to try, basically coming from the past papers, so that you get used. Don't just read the chapter and you think you have understood. Test yourself after reading it and so that you can practice, whether you can prepare the answers to those questions. So if there are no more questions, I want to wish you a good night and also wish you a safe or passing. I wish that you pass this paper. I wish you success in preparation for the exams. Yeah. Okay. See you when we start the lectures. I think my colleague Robert will be the one to start. Then I think I'll come back. I think I saw on the timetable I will be with you on 18th of this month after the protest vote or the securing as well as the protecting of the games. Okay. Bye bye.